And it's March 9th, 2023, 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. Let's kick off with the markets now. We'll see oil prices still in holding pattern today after the big $3 drop earlier this week. Might be heading for a weekly loss. You see Brent crude futures there edged up by 1 cent to $82.67 a barrel, while U.S. WTI crude futures, that was flat at $76.66 a barrel. We'll drill down on the market drivers later on the show. Moving on now to the grains market. We'll see Chicago wheat futures slid, giving up the previous session's gains and trading near a 17-month low reached earlier this week on expectations for a Black Sea grain corridor deal between Russia and Ukraine. The most active wheat contract on the Chicago Board of Trade, WV1, that fell 1.2% to $6.89 for half a bushel. Soybeans SV1 lost 0.2% to $15.12 a bushel, and corn, the CV1, fell 0.3% to $6.32 for half a bushel. The wheat market is under pressure from the Russian export competition and expectations that a wartime grain corridor from Ukraine will be extended beyond this month. Russia signaled that obstacles to its own agricultural exports needed to be removed before it lets the Ukraine's Black Sea deal continue. All eyes still on this deal at this time. World food security, that's on the front burner at this time. And back here, the central bank has released guidelines for operation of open banking in the country that will enable participants and small businesses to harness opportunities in the global financial sector. According to the CBN, the regulatory framework established principles for data sharing across the banking and payment systems to promote innovations and broaden the range of financial products and service available to bank customers. The CBN explains that it will foster the sharing of customer permission data between banks and third-party firms, as well as enhance efficiency in financial services. On the Nigerian Exchange Limited, wronged by the co-president of Women Execs on Boards, Rosie Bichard, to commemorate this year's edition of International Women's Day. At the event, Mrs. Bichard noted that while the NGX has made progress in embracing gender equality, much still needs to be done to ensure adequate representation of women in the capital market. On our part, the representative of the women group at the NGX, Irene Robinson Yawale, says financial literacy for women is key.
We had the opportunity to discuss last night some of the progress that the Nigerian Stock Exchange and the corporate environment has made in Nigeria. We commend you for the progress that you've made within the company and outside on the capital markets in partnership with many other organizations. As we all know, there's a long way still to go, and we're looking forward to monitoring and being a small part of the progress that you make in Nigeria towards embracing equity.
We work in collaboration with the CBN, with the NCC, in terms of things we roll out for financial literacy. The other aspect is also research, collaborations and partnerships that we enter into with organizations like IFC to come up with research around what are the issues and what are the areas, what's happening in terms of some of our listed companies, what is their approach to women in terms of staff, in terms of boards, in terms of products, and so we do have a program we call the Nigeria to Equal program, which we have been on, I would say, for like 3 years thereabouts. And the aim of that program is basically to get our listed companies to embrace this gender equality issue.
Yeah, big day for women globally. We did wish them happy International Women's Day yesterday, and well, the conversation continues for gender equality. Now let's see what's happening today. Now we see telecom operators in Nigeria have begun to roll out unified unstructured supplementary service data USSD codes or short codes for customers, and this is happening half a decade after the Nigerian Communications Commission published a report advocating for the consolidation of short codes in Nigeria. To help us understand this, we're being joined by Gbenga Adebayo, Engineer Gbenga Adebayo, Association of Licensed Telecom Operators of Nigeria. That's the chairman of Alton. Join us via Zoom. Great to have you on the show. Good morning.
Good morning, and thank you for having me. Good morning.
So, talking about this USSD code unification, tell us exactly how this would work. What's wrong with having, multiple codes?
Thank you. From what we have seen, a number of our operating companies, the members of Alton, do have different short code for accessing different services. For example, for checking data balance, some operators use *77#, others use *242#, others use *232#, and all of that. What this aims to do is to harmonize it, that you have one uniform code across all networks. So if you are having network A, network B, or network C, for example, for call recharge, going forward will be just *310#. For credit recharge, will be just *311#. And this should be common across all networks. We think it's more convenient for the users, and we also think that at the end of the day, it's easier to memorize, it's easier to utilize, and it's just according to international best practice that this code be harmonized for now.
Is there any risk to having one code for all of these USSD transactions?
It's just the complexity of having so many codes for different providers. We operate one national network, all networks in one network. And we think that if it's the principle of all networks in one network, it should be just the one uniform code applicable across all operators. It's just for the ease of use and to minimize the complexity in using usage of those short codes.
All right, so would that be enough time for customers to understand, start using the unified code? Is there any burden to the users with this whole process?
We have now obtained regulatory approval to see what we're going to do now is to begin to migrate gradually. We are setting May 17th as the deadline for migration, and commencement will probably be a few weeks after. So perhaps about the 1st of June or so, subject to concurrence of all our members. We expect that migration should commence. The good thing about it is that both the new code and the old code will run simultaneously for a period of 1 year before the old code will cease to exist. So there will be no loss of time, no loss of information, or no loss of access by any of the users.
So that means I can use one code regardless of whichever bank I bank with. I will have one code because I know the banks have different codes. The networks have the telephone networks have different codes. So I can just use one code for everything.
I must clarify that this is not for banking services, and that's very important to emphasize. This harmonization of codes is not for banking services, it's only for telecom services. For services such as a voicemail service, a call center service, checking of balance, credit recharge, data plan, data balance, NIM and SIM, SIM linking, and porting services. These are telecom services. They have nothing to do with banking services at all. And these are features that currently exist today. Users don't pay for this service at all, except for that provided by third parties, such as the one linking the name with the SIM, with the SIM. Otherwise, all services are free, and this has nothing to do with banking services at all. These are only for basic telecommunications.
And definitely we'll be, watching to see how the process unfolds. But talking about banks now, I do remember last year there were issues with some payments, some backlog of payments by the banks that were supposed to be made to the USSD providers. How is that looking right now? Is there any headway with that?
There are discussions going on at high levels, and we are hoping that we will soon come to the end of this issue of debt owed to the operators by the banks. It's not yet resolved, but we're having high-level discussions. Regulators are now involved, and we hope that in no time this matter will be fully arrested. But we are still on it. Discussions are ongoing at highest level.
All right, let's look at the telecom sector, generally now. In 2022, how did you see subscriber growth in the sector and contribution to GDP?
Quite significant. I refer you to data provided by the regulator and by the Bureau of Statistics, but you can see that from the numbers that telecom has become the most important, or one of the most important social support services, irrespective of what we do. You can see even when we're talking about the digital naira, the cashless economy is all dependent on telecom services. And that's why we consider our sector as being one of the most critical to economic growth. And we continue to seek the support of all the stakeholders in ensuring that we have the right atmosphere to operate as an industry.
And right now, the issue of cash, that's still weighing heavy on a lot of people at this time. We did get that circular by the central bank there to redesign the notes, and we still have that whole drama between the old notes and the new notes. How did that impact your industry?
We continue to support the banks and the financial sector. Around the clock, we provide support services for them. The transport access that we provide for them for reasons of other banking services are available at all times and at all places. And so the challenges that are being experienced by users many times comes from the end of from the banking services end. We are only carrier service to the banks, and under the current regime, we are doing all that we can to provide them with the required support to make life easy for Nigerians. But I think the banks need to do a bit more to make this possible. And I think also information is critical. It will appear that the banks are not giving enough information to the public as to where the problems lies in. And we think that they owe the public that explanation as to what exactly is going on, instead of leaving people to imagine that today is telecom services, tomorrow is the banks and all that. As an industry, we are providing all the required support for the banks. We will continue to do so to make life of citizens easier, but we are not in control of what happens at the end, at the banking end. In essence, we don't have any control over what happens when we transport subscribers to the banking service. And that's why we think that the banks have to do a bit more in getting things better, making things better for the public.
And obviously, it's been quite a challenging first quarter in 2023. What are you seeing for the telecom sector, contribution to GDP when the report comes out for GDP contribution? What are you seeing for the telecom sector?
We are positive. We are positive because there's also no doubt that the issue of the cashless naira has brought more traffic onto the telecom networks, more data traffic in particular. Also, we're talking about 5G. A number of our providers and members are now rolling out the 5G, which we think will improve also not just user experience, but also will improve subscriber uptake. So we think the numbers are looking up, and we continue to look up because of the critical role that we play in supporting the economy. But we are not yet there. Looking at all the challenges that the industry is facing, we think we need a lot more support as an industry to do things in better ways and to make life of the public better than what we currently get from the public. In particular, in terms of support for our infrastructure. Other things such as access to foreign exchange and the rest of them. And these are some of the problems that we face. We bring into the attention of the authorities, and we hope that in getting the right intervention in that regard, it will also help us in having a better operating environment.
And definitely, some of us already have the 5G on our phones at this time. But what are you seeing for deployment for the whole of 2023 from other providers that have not been able to deploy 5G yet?
Well, for us to have a robust national network, we all don't have to do 5G. Some will provide services on 3G, 4G, and others on 5G. But I think, like I said earlier, because we operate all networks in one network, we actually have one national network. And we think that the contribution of each member to this national network will improve subscriber uptake, will improve user experience. But we all have a duty to sustain what we have. And that's why we continue to say to public actors, do not consider telecom as fully built. It's a technology industry. We need to continue to grow capacity. We need to continue to grow in terms of user development. We need to continue to grow in terms of interface with other third-party providers and the rest of them. We think that with the way we are talking about now, the digital economy, the cashless economy, we think we'll have a more robust telecom sector, we'll have a more robust digital ecosystem, and we think that to a large extent, this will improve our national economy, both in terms of GDP and also in terms of foreign direct investment.
I guess all hands have to be on deck for this transition to a cashless economy, but we also need to have a choice, you know, if you want to go cashless or you still want to use cash, so that we don't have this burden, you know, that we have right now. But we'll keep tracking the USSD code unification. What are your expectations, you know, at the end of rollout of this unified USSD code?
We think the users will have better experience. Today, the numbers are quite complex. Sometimes people make mistakes because people use a SIM card from different service providers. And to recharge on one phone, you need one set of number, on another phone, you need another set of number. We think once the harmonization is done, it makes life easier and better for people. It will offer better user experience. And I think that we will be able to say we have standardized the protocol for USSD as an industry, and that's what we aim to do. We will provide enough information for the public. It will not impact on services. The migration process will not have any effect on anyone. There will be enough time for people to migrate. There will be enough time, enough information provided by our members. It's just to inform the public, and that's what we have done. And all of this is aimed at making life easier for subscribers and making user experience better on the national network.
Yeah, and definitely you don't have to go online to start looking for short codes for different carriers and all of that, which is which is good. All right, thank you so much, Engineer Benga Adebayo, Chairman, Association of Licensed Telecom Operators of Nigeria. It's great having your perspective today. Thank you.
Thank you.
So Nigeria's headline inflation rate for February is expected to slow by 20.96%, and that's according to projections from financial derivatives company FDC. To talk more about this, we have Dr. Desola Simoni, Senior Analyst at FDC. Good morning, Desola. Great to have you.
Good morning, Ladi, and thank you for having me on the show.
So this projection obviously doing my head in, because I know February was very challenging. And with the whole cash scarcity, people having to pay for cash, the fuel queues still there, and you guys are expecting a drop for inflation. How's that going to happen?
Thank you. So, like you said, the National Bureau of Statistics is expected to release the February inflation numbers March next week, on 15th of March next week, which is next week. And we forecast that inflation will actually decline by 0.8% to 20.96%. And this is driven by a host of factors. Number one is base year effect. So because of the comparing the CPI with February last year, which was also high, we expect that would support a decline in inflation. On the second hand, we've also seen a relatively stable exchange rate because, you know, exchange rate, given that Nigeria depends heavily on imports, so exchange rate pass-through effect has a strong impact on inflation numbers. So we expect, because the inflation numbers, because exchange rate has been relatively stable at the parallel market in February, it was stable at around 752 naira to the dollar. At the investor and exporters window, it was also relatively stable at about 460 naira to the dollar. So those two main factors are why we predict a decline in inflation. In addition to that, like you mentioned, Ladi, we've seen cash shortage in the country, which kind of slowed down economic activity. So that also contributed to the decline in inflation. In addition to that, also, although we saw fuel queues, partly due to cash crunch, the price of fuel has actually declined by around 59%. So all of these factors are why we predict a decline in headline inflation. In addition, Ladi, we're also forecasting a decline in core inflation by 1.1% and a decline in food inflation by 0.08%. However, Ladi, on a month-to-month basis, inflation increasing slightly on a month-to-month basis by 0.08%, which suggests that the inflationary pressure still persists, and this is something that the Monetary Policy Committee will have to consider clearly at their meeting later this month.
And talking about the MPC, we know globally central bankers still trying to rein in inflation at this time. And we know that the CBN here, they've been quite busy, trying to mop up all that cash, outside the banks. Are you expecting more rate hikes, at the next meeting?
I think at this meeting, we expect the central bank to hold all monetary policy factors unchanged, because one, we are going through like a precarious moment with the elections and change of administration. In addition to that, there's still this challenge of not enough actual cash in circulation, even though we've seen an increase in cash in the banking system, which suggests that maybe monetary policy would be more effective. But in terms of economic activity, I think at the moment, the central bank is trying to look at the pass-through effect of the previous hikes the previous rate hikes in January. So I think at this moment, the optimal option is to maintain all monetary policy parameters unchanged.
All right, going outside our shores now, we know the U.S. Fed chair is hinting at raising rates even more, and we're seeing that play out in the oil market, with prices dropping earlier this week about $3, and risk assets, being hit hard at this time. It looks like it's going to be a weekly loss for the oil market and risk assets like equities, global equities.
Indeed, Larry. So, like you mentioned, I think the key takeaways, or the key takeaway from the U.S. Fed's testimony in front of Congress is higher and faster. Essentially, U.S. Fed Chair Jay Powell mentioned that the U.S. Fed is ready if all the incoming data suggests the need to increase rates at a bigger size and quicker, that they are willing to do that. And like you mentioned, that hawkish tone, took a toll on the market. We saw S&P 500 in New York go down, close at 1.5% lower on Tuesday. We saw NASDAQ down 1.25% also on Tuesday. We saw the U.S. two-year Treasury bills, which kind of tracks market expectation, also rise. The yield on that rise to like the highest we've seen since 2007 at around 5%. We saw the U.S. dollar also strengthen against a basket of currencies, which had a strong effect on US dollar denominated commodities like oil. We saw oil also decline. We saw gold decline. So because of expectations of this higher pace or higher size increase in benchmark interest rates, I think it also suggests that the US Fed, also the ECB, are trying to slow down economic activity, which is going to slow down, the demand for oil, and that's part of why we're also seeing oil prices trend downwards at this time.
So at this point, is it for sure that we're going to get that global recession? With the way the central bankers are looking super hawkish at this point.
And I think, Gladys, it's the corridor of which the central bankers, global central bankers, can kind of slow down, bring down inflation while still kind of escaping a recession is getting narrower, right? So with last year, for example, we saw the fastest pace of increase in of tightening in the US globally, the fastest we've seen in around 40 years. And we expected that should kind of cool down the global economy, but we are not seeing that, Ladi. At least for January numbers, we saw inflation still remain sticky. And for a country, where the long-run inflation target is around 2%, with inflation levels being at 6.4%, is giving them sleepless nights. We're also seeing a strong job market. In January, the numbers for new vacancies and new jobs in the US came in bigger than expected, and that also spooked the central bankers. And that is why Jay Powell, at his testimony earlier this week, suggested that previously he had forecasted that benchmark interest is going to peak at around 5.1% at this year, but now we are expecting that would increase even for the meeting for the US Fed meeting later this month, which previously there were expectations of a 0.25 percentage point increase in benchmark interest rate. I think now markets, they are now stronger bets and bigger bets for a 50 basis points increase.
And obviously, the markets are already reacting to all of this. And we know the U.S. Fed chair, he's been trying to, let the market know that we're going to go harder with this interest rate hikes. Don't get too excited. We know how the markets rallied in the first part when 2023 started. But it looks like all of that is gradually coming to an end, at this point. But do you think those investors that are willing to bet on, some kind of recovery in these markets, do you think they have a chance in 2023 to see a bull market in the global equities market?
I think at this point it's quite so let me say this, that we're expecting the US Fed chair said, it depends on what the data says. So they're trying to follow a data-driven approach, right? So at this point, I think there's a lot of uncertainty. And even though yesterday, on Tuesday, the US Fed said, they're willing to go hawkish, if the job numbers come in softer tomorrow and inflation numbers for the US next week, I think on the 15th of March, if it comes in softer than expected, then we may not see that, and if it persists, then we may not see that. So I think it's quite tricky, but I think it is possible that we may still see a bull market towards the end of this year. But I mean,
that US job market still very resilient at this point. Let's look at cocoa prices now. We see they've rose about 0.43%. What's driving that?
Mainly cocoa at this moment is tightness of supply from Ivory Coast. So Ivory Coast is the biggest producer of cocoa globally, and over the weekend the exports the exports at the Ivory Coast ports came in lower, about 1.7% lower, to 1.72 million metric tons compared to the same period last year. Also in Nigeria, the Cocoa Association of Nigeria forecast, for January, cocoa exports was also down around 5.9% year on year to 43,000 metric tons. So we are seeing some tightness of supply in cocoa coming out of West Africa, and those are the key factors driving cocoa prices at this time.
And looking at domestic commodity prices now, on your slide there, we see a 50 kg bag of Gary rose about 20K. And price of bag of onions, that's going in the opposite direction. That's dropping. What's driving sentiment in that market?
So for the domestic commodities market, I think the biggest factor driving it now is the cash crunch in Nigeria, right? For perishable goods, we are seeing, because of the cash crunch, many transactions could not, we are seeing a slowdown in economic activity. Many transactions could not hold down. For perishables, we are seeing the price of those commodities decline quicker, so that, these sellers are able to sell these commodities before they go bad. In addition to that, Ladi, we're also seeing, a kind of slowdown in economic activity, slightly preceding the election and also slightly following the election, because of a risk of electoral violence. So we saw like a slowdown in economic activity, a slowdown in transportation of some of these commodities from where they are produced down south, and that kind of reduced the supply. For instance, for Gary, reduced the supply available in the southern parts of Nigeria. Because of Gary has a longer shelf life, we are seeing the price remain quite sticky upwards.
So I guess the dry foods sellers, they're going to do better in this market at this time.
Indeed.
All
Indeed,
right.
Ladi.
Thank you so much, Dr. Desola Simoni, Senior Analyst, Financial Derivatives Company. It was great having your perspective today. Thank you.
Thank you for having me on the show.
Welcome back. Let's head on to the markets now. We have Willie Bong with the details, and Will, it's still bullish.
Yes.
I guess you women got a gift yesterday.
Ladi, I did tell you that when I go to the NGX, that it's going to come back green.
Exactly.
My presence there, motivates them.
That feminine touch we had on the NGX on the floor.
Note that, Ladi.
Right.
So you don't just, don't say anything against us. Just
exactly.
know that we women, we're powerful.
Yeah, you run the world.
Yes, we do.
Exactly.
Good morning. And the bullish sentiments resurfaced to the domestic equities market yesterday. We saw bargain hunting in Dangote Cement, which was up about 1.8%. And this triggered triggered the 0.35% uptick. We also saw MTN Nigeria doing the trick there yesterday. So all share index settling at 55,801 points. The market cap at 33. The 30 trillion naira mark still very, very bullish. Good. And year-to-date gain increasing to 8.9% yesterday. Now we're looking at activity charts. So total volume decreasing yesterday by about 4.2% to 152.74 million units, valued at 3.57 billion naira, and all transacted in 3,293 deals. Performance, look at the sectors, we saw it was broadly positive, except for the industrial goods. The industrial goods, banking and insurance were in the positive yesterday, except for consumer and oil and gas. Oil and gas MRS was the downer here. Consumer goods, we did have some of those high cap stocks falling yesterday. And Dangote Cement did a trick for the industrial goods section. Insurance was also up. Banking, we had some rebound in some of the banking, tier 1 banking stocks. Now, Cordville Solutions was the most traded stock yesterday. It rose yesterday. We had about 34.6 million units of its shares traded, followed by UBA and GTCO. While we saw Dangote Cement was the most traded stock by value. And looking at market breadth was mixed yesterday. Unlike the negative sentiment we have been seeing in the market, we had equal number of gainers to losers. That's 18 each. And now we're going to talk to our analyst, Mercy Okon. She's research analyst with Party and Securities, to give us more insights on what's happening in the market and what to expect today. Good morning, Mercy. It's good to have you on the program.
Thank you for having me.
Mercy, can you just tell us, we were talking about yesterday's activities, we saw bullish sentiments coming back into the market, and we saw market sentiment in terms of market breadth also returning to positive territory. What about yesterday's activity in the market stood out for you, and what's driving this positive performance?
Yes, so as you rightly said, the market actually did close positive yesterday, right? And the major reason why it wasn't the positive was because of the renewed interest that we saw in the mid to large cap stocks. To be more precise, stocks like Dangote Cement, MTN, GTCO, Zenith Bank, and likes. As a matter of fact, Dangote Cement actually transacted 7.324 million shares yesterday, which was worth 2.088 billion, right? And as a result of this, as we all know, Dangote Cement is a large cap stock. I said MTN, GTCO, and Zenith also did quite good yesterday in terms of value, right? And because these are large cap stocks, they have positive impact in the market, right? So because of the level of activities we saw in these stocks yesterday, they actually did close in the positive. And because these are top influencers in the market, in the sense that the weights, the market weights that they hold in the market is quite large, because they closed in the positive, this was actually what drove the market closing in the positive yesterday.
Okay, so we're seeing a continued decline. If you have the sectors up there now, just to show what I want to represent, what I want to say now, we saw the decline in oil and gas sector, almost 1% yesterday, and this is, we're seeing a persistent trend here. What's driving that in the oil and gas sector? Can you tell us, Mercy?
Yes. As you said, there was about a 0.90% decline in the oil and gas sector yesterday. So if you look at the trend from the beginning of January up until last Thursday, you would see that that sector has been experiencing some level of increase, right? And especially at the point where the companies in the oil and gas sector, likes of Seplat, MRS, oil, corn oil, at the point where they started putting out their corporate earnings, you would see that that kind of impacted on the market, in the sense that share prices appreciated, right? And because of that, we saw this impacted the market positively. However, you know how the market dynamics work. When prices keeps going high, right, to definitely come down as a result of investors trying to take profit out of the market. So I would say that one of the reasons why that sector is experiencing the decline we're seeing right now is because of the sell-off in that sector. And also, if you look at the global crude oil space too, you'll see that there's been some level of volatility in that space, right? And this is majorly because, one, as of the beginning of the year, at the point where China's eased off the COVID restriction, right? We expected to see some level of demand on that end, seeing as how they are one of the top importing countries for crude oil. However, the market is yet to see that demand. We're not seeing it yet, right? And then the news is that there's been some level of alliances between China and Russia. So it seems as if they're buying some level of oil from Russia, right? And as a result, we are not seeing that impact in the markets yet. And of course, there's also the concern of Fed rates, right? The anxiety or the uncertainty that comes with the fact that, oh, they said that the result to continue increasing the rates as inflation goes high. So this is actually impacting on the market as investors do not know what to expect as to the level of increase in rates, right? And lastly, there was a report out on Monday where we saw that India has actually been purchasing crude oil from Russia for 5 consecutive months, right? And we saw that there was a chart as of that Monday showing the level of the purchase level of crude oil being bought from Nigeria and from other countries. And we saw that as of 2022, the volume of purchase, right, in Nigeria decreased and that of Russia increased. And of course, you know, this actually has an impact on the global market, the global crude oil space. And let's not forget that there's a positive correlation between the crude oil, the global crude oil space and the NGX ASI, in such that when the crude oil space is doing quite well, the NGX ASI actually tilts towards that direction. So if you have the volume of purchase in Nigeria decreasing, of course, you know that it will affect the activities, right, in the companies in that sector. So I think this is majorly part of the event. Because of this event, this is actually what is impacting on that sector currently. So I talked about the profit taking and then the global crude oil events. Thank you.
Interesting analysis, Mercy. We're just hoping that this global oil volatility, you know, changes very quickly, because Nigeria does need this positive performance and this uptrend, especially for our forex, for our economic activities. We do need this monies coming in. Thank you so much, Mercy Okon, research analyst, Pattern Securities, for sharing your thoughts and insights on the program.
Thank you very much.
Now, so look at the FMDQ market. Well, first the NESD market was already up there. So look at it was kind of bullish yesterday for the NESD. It's closed. It had a rebound, marginally 0.04% to, you know, just very small uptick to close at 719 points. 945, still the market cap we're seeing for the NESD. Volume 65.05. Although we saw a jump in volume and value yesterday, number of deals though declined, but we still saw number of stocks remained unchanged at 6. You know, companies being traded in yesterday's trading session. And now look at the fixed income space. We saw that the bond markets, you know, there were mixed sentiments, although it closed bullish, because we still saw a downtrend in yields. It shed about 2 basis points overall to close at 13.13%. On the flip side, we saw the treasury bills market closing flat, because there was almost no transaction, muted transaction, because of the primary auction that took place yesterday. Average yields stagnated at 3.65%. Same for the OMO section. We're just hoping that in today's section we see a bit of a rebound, more activities, and, you know, people coming to the market being more bullish, you know, and not being, you know, very cautious as we're seeing at the moment.
Looking at the NGX today, I'm wondering if what's going to happen this weekend, the postponement, is going to play into sentiment in the market, because we know how the market, you know, tends to rally, you know, before the election weekends, but now it's postponed. So
we just hope that they just keep that momentum going. You know, the election is probably next week, not this. I mean, next week. But we're just hoping that investors will see just as, oh, let's continue trading, you know, put our monies there, not just pull out the money, because election or no election, the market, the economy must still go on. Yeah, and watching out to see how that impacts our bonds, the international market, or government bonds. Yeah, because those foreign investors nobody wants a postponement at this time, but it's fine. Sure. It's fine. Thank you so much, Will, there with the details on the NGX and the fixed income market. Let's head on now to other markets. We see Bitcoin still being hammered at this time. Price failed to recover above the 22,250 resistance zone, and we see the market there sinking towards 44 points. For the sentiment, this is definitely fear we're seeing right now at 44 points. If you look at the market cap this morning, lost that $1 trillion
psychological support zone. That level's gone down 1.21% for the total crypto market cap, Bitcoin and all the altcoins, and we see volume traded down 7.66%. Bitcoin dominance sitting at 42.09%. We're seeing some volatility there with dominance there with the altcoins in the market. Let's look at the price of Bitcoin, 21,750, lost the 22,000 mark, down 1.36%. Volume traded $21.56 billion. We did get that report there from Jerome Powell in the U.S. talking about raising rates even higher, and we know risk assets don't like rates going up, and we're seeing the Bitcoin and Ethereum, all the altcoins reacting to that. Sell-offs, it's risk off at this point. Price of Ethereum, $1,540, down 0.87%. We see volume traded $6.91 billion. Let's look at the top alts by market cap this morning. It's just XRP and BNB going in the other direction. $290, trying to get back to that $300 level, up 1.19%. Talking about Binance token and XRP in the green, up 3.33%. Let's bring in Success Chibike now, CEO Baisasi app. Great to have you. Good morning.
Good morning.
So looking at the current sentiment in the market now, there's news about defunct top cryptocurrency exchanges. That's trending in the market now. What does that tell us? Is the bear market still being weighed down by all these exchanges that are going under, and some still in some kind of dispute at this point?
Okay, the Equities exchange, yesterday they said their users have just tomorrow to refill the claim for their payments. So this MT exchange was like the first Bitcoin exchange with having the highest trading volume back in 2013. So it was assumed to be hacked when its customer lost over 850 million Bitcoin, as equivalent $680 million at that time. So bringing back this crypto has caused a lot of controversy, and you can see the bearish sentiments in the market right now.
So with the repayments of most of this Bitcoin with that cryptocurrency exchange, the MT Gox, is it something the market should be concerned about? Are those people being paid? Have they started to sell off their Bitcoins already?
Okay, as of yesterday, the fine claim recorded has amounted to about 799 Bitcoin, which at today's value is $17.6 billion. So, but there's a news this morning, just before I joined the news, that the deadline for the repayments has been shifted to April 1st, and the reimbursements will now be late in October. So I think the markets will stop reacting to it a lot, but it's still wise to look out and be on the safe side, because much dormant Bitcoin from like 9 years ago coming to the markets is going to be a lot of disaster to the markets, because these creditors has been frustrated and they don't even have hope of getting their money, and getting your money back and seeing that you are rich, supposed to just sell off and make use of the money. But it's quite number of the amount of Bitcoin belong to institutional investors, which have come out this morning to say that they might not be selling their Bitcoin. So it's just a 50-50. There's hope for the market not to react so much, henceforth, since there's a counter news this morning.
And I'm sure they have some retail users that are also going to get paid. And who knows which direction the retail users are going to go. Are they going to want to sell off, or maybe they want to hold, some of that Bitcoin for future gains? But, the market it seems to be a lot of caution in the market now with what's happening with the U.S. and global central bankers still want to raise rates at this time. So which one do you think is weighing on the market more? Is it the risk of recession, or some of these Bitcoins coming out of MT Gox?
I would say it's a combination of both. Yesterday, Silvergate also declared bankruptcy. So there's just a lot of fraud in the market. And technically, Bitcoin has also lost its support. So I'm not to give financial advice, but I think the market is heading bearish. So it's a combination of both affecting the markets. But
and
we'll
obviously,
still hope for the
before
best.
now, you know, some said it was the optics we saw were bearish optics. Even though we saw some green and Bitcoin did rise from about 16,000. Some say, oh, fine, this is not going to last, and it looks like that's already playing out. You know, at this time with the price action we're seeing. But you know, going forward now, look into your crystal ball. End of 2023, what are you seeing? Price action.
Okay, at the end of 2023, we'll be talking about the next Bitcoin halving. So there's usually these sentiments with Bitcoin halving, because after Bitcoin halving, the price of Bitcoin usually skyrockets. So I think regardless of the bearish sentiments now, I think the end of 2023 will be nice. So I'm hopeful, and yeah, it will be nice.
All right, success is hopeful. Thank you so much. Success, Chibike, CEO of Buy Sussy app. Thank you so much.
Yeah, thank you for having me.
All right, so we see success there, hoping for a better outing for Bitcoin at the end of 2023. Let's look at the top gainers counter now. Let's see who's topping that. That's Kava, 87 cents, up 6.73% this morning. So we can see for the top gainers counter there, it's single-digit gains with OKB, TON, up 5.72%. And we see Shiba, Bone Swap there, 2% up, $1.72. XRP also getting that list, up 3.39%. Let's look at the top losers counter. We see IMX there, double-digit loss, 12.78%. And we see SNX, that was on the top gainers counter a few weeks back, but it's down 11.57%. Could be profit taking on that. And AGIX also down 8.65%. AGIX definitely had a good run in the first quarter of this year. So the market is looking quite red this morning, and it looks like maybe Friday, you know, we know Fridays to have some kind of bearish tone to it. So we'll be looking out, see how the market plays out, and obviously everyone looking at all the central bankers at this time. So that's how the market is looking today, quite bearish for the crypto market. And that's it on the program today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Flip over to YouTube, search for Channels Television, and you can watch all our productions. Thank you for watching. I'm Ladi Williams. Enjoy the day.